morning and welcome to ALA's Community Scheme Training, Part 3. We are busy looking at the prescribed management rules to the Sectional Title Schemes Management Act, and we're on Rule 23, which is all about insurance. Insurance is very important in a sectional title scheme. We have one type of insurance for public liability. That's if someone slips and hurts themselves, the insurance policy pays out the person their damages. The second type is for the buildings, to maintain the buildings and keep them in tip-top shape. And the third type is fidelity fund insurance. If the trustees or the managing agent or any other party steals the body corporate's money, the fidelity fund insurance will reimburse the owners their money and restore the bank account to what it was. So we're going to look at Management Rule 23. In brackets 1, the insurance policies of the body corporate in terms of sections 3(1)(a), H and I of the Act must provide cover against risks referred to in Regulation 3. Risks that members resolve must be covered by insurance, and risks that holders of registered first mortgage bonds over not less than 25% in number of the primary sections by written notice to the body corporate may require to be covered by insurance. We will come back to Rule 1 at the end once we've discussed the other types of insurance. Sub-Rule B must specify a replacement value for each unit and exclusive use area, excluding the member's interest in the land included in the scheme, provided that any member may at any time by written notice to the body corporate require that the replacement value specified for that member's unit or exclusive use area be increased. So practically what will happen at the AGM is there'll be a schedule of insurance values. There'll be a list of units, 1 to 100, and each unit will have a replacement value. So if an earthquake were to happen and one had to rebuild the unit the next day, that money would be enough to cover the rebuilding. So every year those figures normally go up and those new figures are approved at the AGM. It says here excluding the land. Obviously the land will normally not be destroyed by an act of God, so the insurance value will exclude the land. It's only for the rebuilding of the unit. Sub-Rule C must restrict the application of any average clause to individual units and exclusive use areas so that no clause applies to the buildings as a whole. Right, that's insurance terminology. Should make sense to everyone. If not, we can come to it at the end. D must include a clause in terms of which the policy is valid and enforceable by any holder of a registered mortgage bond over a section or exclusive use area against the insurer, notwithstanding any circumstances whatsoever which would otherwise entitle the insurer to refuse to make payments of the amounts insured, unless and until the insurer terminates the insurance on at least 30 days notice to the bondholder. Quite a long sentence, but basically saying that the mortgage bond holder, let's for example say there's a bond held by Standard Bank and they've lent 10 million rand to the owner to buy the unit. The mortgage bond holder, Standard Bank, can themselves claim on the insurance policy. So they can restore the unit, they can make the claim on the policy, rebuild the unit, and in that way get their money back. And E may include provision for excess amounts. So in the policy there can be excesses which are payable by owners or the body corporate. Alright, Sub-Rule 2. A member is responsible for payment of any additional premium payable on account of an increase in the replacement value referred to in Sub-Rule 1B. That's if he wishes his unit to be insured for more, he has to pay the extra amount. B, for any excess amount that relates to damage to any part of the buildings that a member is obliged to repair and maintain in terms of the Act or the rules. So the owner himself has to pay excesses referred to in the policy in regards to the unit. It says a member must furnish the body corporate with written proof from the insurer of payment of that amount within 7 days of written request. Alright, moving to Management Rule 3. body corporate must obtain a replacement valuation of all buildings and improvements that it must insure at least every 3 years. So most complexes would do it annually at the AGM, but the legislature says at least every 3 years you must obtain a replacement valuation of all the buildings and present the replacement valuation to the annual general meeting. Subrule 4, a body corporate must prepare for each annual general meeting schedules showing estimates of. So at the AGM you'll see a schedule showing A, the replacement value of the buildings and all improvements to the common property, and B, the replacement value of each unit, excluding the member's interest in the land included in the scheme, the total of such values of all units being equal to the values referred to in Subrule 4A. Alright, number 5. On the written request by any registered bondholder and the furnishing of satisfactory proof, the body corporate must record the cession to that bondholder of that member's interest in any of the proceeds of the insurance policies of the body corporate. So this is a trick that a bondholder can use. The bondholder can request that the body corporate cede to the bondholder the member's interest in the proceeds of any insurance policies. Let's say a unit's being built for 100 million rand in Clifton in Cape Town, and the bank has a further protection for the loan they're making of 100 million rand. Once the insurance policy is ceded to them, then that can be done in terms of Rule 23.5. We have 3 more rules to go. In brackets, number 6. The body corporate must take out public liability insurance to cover the risk of any liability it may occur, to pay compensation in respect of any bodily injury to or death or illness of a person on or in connection with the common property, and any damage to or loss of property that is sustained as a result of an occurrence or happening in connection with the common property. So this insurance will cover the body corporate as a legal entity and also the members themselves if a visitor to the complex, a contractor, another owner, a child, if they hurt themselves on the complex premises, if they drown in the pool, if they have a car accident. It's called public liability insurance, and every complex has to have it. That's why the rule starts with the body corporate must take out public liability insurance. It's compulsory. And the rule continues, it's for an amount determined by members in general meeting, but not less than 10 million rand. So that is the minimum amount, or any such higher amount as may be prescribed by the minister in any one claim and in total for any one period of insurance. So the minister may in the future make a regulation where this amount is lifted to 20 or 30 million rand, but for now it stands at 10 million rand. Subrule 7. A body corporate must take out insurance for an amount determined by members in general meeting to cover the risk of loss of funds belonging to the body corporate or for which it is responsible, sustained as a result of any act of fraud or dishonesty committed by a trustee, managing agents, employee or other agent of the body corporate. This is called fidelity cover. It's a new addition to the sectional title legislation. Again, it's compulsory. A body corporate must take it out. There's no minimum amount prescribed here, and it's for loss of funds from fraud or dishonesty committed by these parties. Alright, the last rule, Management Rule 8. A body corporate authorized by a special resolution of members may insure any additional insurable interest the body corporate has in the land and buildings included in the scheme and relating to the performance of its functions for an amount determined in that resolution. So that would be the 4th type of insurance that the body corporate could take out. Subrule 23 is a very important rule. If any of you have any questions about insurance, then take a look at Management Rule 3. It sets out the 3 types of insurance, which are again fidelity insurance, public liability insurance, and insurance to the buildings. If you have any queries whatsoever, please feel free to contact me. You can reach me on inquiries@alattorneys.co.za or 011-326-8050. Please also subscribe to our channel. Don't miss out on any videos uploaded by clicking on the bell icon. Have a super Friday and weekend.